Autonomous aerial vehicles to be manufactured in Abu Dhabi, and a Russian Navy vessel photographed at Nord Stream just before its sabotage. You're watching the Daily Brief with Forbes. I'm Ramia Farrage. Abu Dhabi-based manufacturer Monarch Holding and Chinese autonomous aerial vehicle company EHang Holdings have inked a deal to manufacture and operate sustainable electric-powered aircraft and drones for passengers and cargo transport in Abu Dhabi. They'll manufacture electric aircraft and drones, establish a command and control center to manage urban air mobility autonomously, facilities for operating electric aircraft and drones, and they'll build infrastructure and takeoff and landing platforms called vertiports. The partnership will help establish an advanced infrastructure for these vertiports and an autonomous flight management system operated by AI. The Eurozone grew only marginally in Q1 this year and at a rate lower than market expectations after stagnation at the end of last year. Official data shows Eurozone GDP expanded by 0.1% in Q1. This compares to GDP growth of 1.3% during the same period last year. Surging inflation on high energy costs and rising food prices, as well as waning confidence and increased interest rates, have taken a toll on the single currency's economy. A Russian Navy vessel specialized in submarine operations was photographed near the sabotaged Nord Stream gas pipelines just prior to the mysterious blast in September. The submarine rescue ship SS-750 was photographed in the Baltic Sea 4 days before the still unexplained explosions on the pipelines that link Russia to Germany. The ship carries a mini submarine. The Danish military confirmed that 26 photos of the Russian vessel were taken from a Danish patrol boat in the zone. 7 months after the blast on the Nord Stream 1 and 2 pipelines, it's yet to be established who was responsible. Oil prices will pick up pace towards $90 a barrel over the course of this year as production cuts by OPEC Plus and rebounding China demand shield against a deteriorating economic backdrop in the West. That's according to a Reuters survey of 40 economists. They say the main factors driving prices this year will be OPEC production cuts, the comparatively limited supply response from U.S. producers, and demand developments in China. And staying with oil, Exxon Mobil saw a record Q1 profit that was more than double from a year ago, topping Wall Street estimates. Its income rose to $11.43 billion compared to $5.48 billion a year ago. Its oil and gas production rose by nearly 300,000 barrels per day compared to year-ago levels. Exxon's quarter was driven by new volumes of crude and fuels from the startup of new offshore developments and refining facilities. Meanwhile, oil major Chevron beat market expectations as profit nudged higher in Q1. Earnings from refining compensated for a slide in energy prices and in oil and gas production. Net profit climbed 5% to $6.57 billion. Chevron's standout business was oil refining, where higher margins helped income surge more than fivefold to $1.8 billion. But its oil and gas production division saw its net profit tumble 25% on a big year-on-year decline in prices. And Sony Group says PlayStation 5 sales will jump by 6 million units this fiscal year, but it forecasts profits will slip from record highs. Weaker financial services sales are expected to offset gains from gaming, music, and movies. Sony expects operating profit in the year to March 31st to fall 3.2% to $8.65 billion. The improved performance of its gaming unit, however, will come as a relief after Sony struggled to make enough PS5 game consoles to meet demand during the pandemic. I'm Ramia Farrage. This is the Daily Brief. Thanks for watching. Have a great weekend.